Good day, everyone. This is Patrick from XauUsd Trading System, and this Saturday, the 10th of September 2022, and this is the weekly technical analysis for spot gold and dollar yen for the first week of September. And let's begin with spot gold. And let me expand this. You can see that after drawing this rising trend line last week with the two data points, on Wednesday, it did attempt to dip below the 1700 round figure support level again and hit the rising trend line exactly before bouncing back up, and then followed with a consolidation for the next couple of days at the resistance, at intermediate resistance at the 21 pip retracement area. So it stayed within this consolidation area, but it managed to find support from the rising trend line and just below the 1700 round figure. So that was an important support level. Let's extend this resistance areas. Above that, there's the key resistance. And this is definitely support at this key support at this swing low, but also this 1700 is holding as a critical support area as well, along with the rising trend line. All right, so it's managed to stay and close back above the 1700 level. That's the important part. Still needs a bit of work next week to try to climb back up above the 1723, climb back up to 1750 level, and also the 38 pip retracement. And there's quite a number of US news this week with CPI, that's the key one, and retail sales as well on Thursday. So there will be a number of potential fundamental triggers to see if the dollar is going to weaken, continue to weaken, or it can recover and strengthen back up, as we'll see in the DXY. So for now, spot gold has managed to find the support level, and we'll continue with this fib and these resistance areas. All right. Let's take a look at the US dollar index as well and the DXY, see whether it's also retracing lower as the spot gold is climbing back up. And here's the US dollar index, DXY, where it did pick up, continued from last week's bullish move at the end of previous week, and continued to it started off with a gap up in the start of the week to the resistance level at the 110 round figure. It spiked through on Tuesday and Wednesday before pulling back down, and then retracing back almost back to the 78.6 retracement area. So let's mark this as still as support. Let's remove this one now, and the 110 is still a key resistance area. It did spike to a high of 110.51, and that's where it retraced back, pull back strongly. and managed to recover somewhat towards the second half of Friday, but there is a significant retracement back down now. So next key support zone was going to be at the 62 pip retracement level, and that's just above the 107 round figure. And let's take a quick look to see what kind of retracement it went to, and it did hit the 38 pip retracement, so we could also use this. If we flip this over, we can use this as a Fibonacci retracement area. So it did retrace to hit the 38 pip at the 109.14. Oh, sorry, 108.14 area, and it dipped to the low of 108.10. So within 4 pips here. So this will still remain as a intermediate support. The next round figure support is at 107 along with the rising 55 EMA. And below that, the 62 pip retracement area. So, but now, for this coming week, with this bounce back up recovery on the Friday, that could be just consolidation for the week, and with support from the 38 pip retracement as well. So it doesn't seem to be a significant bias either way, and we'll see if the US news will trigger and impact the price action with CPI coming up as well. CPI coming up on Tuesday, early in the week, and with some key news as well. Thursday, there's retail sales. So let's see, and likely it may consolidate between these two fib levels. So if it does weaken further, it will target the 50 pip retracement. And if it does recover back up, then it could retest the 110. But at the moment, doesn't seem that it's going to recover that strong. Okay, let's move back to the other major pairs. Let's move on to the dollar against Japanese yen. And there was a massive push up on the Tuesday. This was right after the news from US with the ISM services PMI, and it was better than expected, and that was the reason for this breakout here above the 200 fib, and then ran all the way, continued on Friday before consolidating on Thursday, and then a pullback on the Friday, strong pullback on the Friday here. So I did have this Fibonacci reversal set up here before, and if we move back to that swing high, and it did extend exactly to the 162 fib extension. So that's at 144, at the 144.05, and it hit a high of 144.99. Oh, sorry, 144.95 here. So just shy of the 145 level, which I have not did not add in here. Didn't expect it to climb up that fast. So that's at 145. Let's mark this level here, 145. Okay. And that resistance was already broken. So now this level is going to be key support at this swing high. So that's going to be our support area. Let's remove this. And let's mark this here. So this here over to the side, 145. So that's the key resistance now. So that's a fairly wide area of support. And some of the next level support areas at the 78.6 fib. Let's remove this one for now at the 62 fib. Okay, so looks like it's also going to consolidate similar to the US dollar index, and it could likely stay within this range from the 145 to this swing low and consolidate for this coming week until the following week, where the FOMC will meet and decide on their next interest rate hike. So there may be a pause next week to consolidate first. And looks like it closed at just at 142.60 area. So likely right in the middle of this range, just on this lower part of the range, but could consolidate in this middle 1/3 area. Okay, so unfortunately, the big moves has already been done from last week with this strong push up and then a pullback lower. So we'll see in this coming week whether there'll be opportunities with all these US news to create some reason for it to break out either higher or lower. But from looking at the DXY and this dollar yen, it looks like it's going to be a consolidation period this coming week. All right. So do check out my other videos on the major pairs, and have a safe week, a good trading week, and cheers for now.